Hi guys, welcome back. Today we're getting into the nuts and bolts of our Forex robot's brain. It's all about that burning question. When should we trade? Now, typically a technical trader would lean on a host of technical indicators, like the MACD, an RSI, or any one of the 1,000 others out there. But where do we start? I've put some thought into it and I've decided to start with some of the basics, just to test out the waters. Specifically, I've decided to plan out and work on the support and resistance levels, the moving averages, and the RSI. We'll get to know them, maybe go on 1 or 2 dates with them, and only afterwards will we invite them to our AI party. For now, we're going to start with the moving averages, and we'll use a classic strategy called the moving average crossover. Specifically, we are going to use a 50 period and a 200 period moving average, and we are going to wait for them to cross over each other. To explain this a bit better, let's take a look at this video. We observe the 50-day moving average, which is the red line, trending downwards, while the 200-day moving average, the blue line, follows its own path. Despite their distinct trajectories, they generally move in the same direction. Now, as we look closely, you'll notice the red line crosses down beneath the blue line, and this is often referred to as the death cross, and signifies a sell trade. In this case, it's a bearish signal. And you can see it would have been a successful trade as the candlesticks follow a bearish pattern. And moving on, we see the red line coming back up and crossing over the blue line from the bottom to the top. This particular crossover signals a buy trade, as indicated by the green circle over here. Now, easy to spot when we physically look at the chart, but how will we see this programmatically? So we have our 2 moving averages, and we'll add the values of these 2 into 2 different arrays. We'll analyze the 2 most recent values of both of these arrays. Let's call them the previous MA50 and the previous MA200. As well as the current MA50 and the current MA200. Right at the center, we have the big if statement. This is where the action happens. We'll check. Is the previous MA50 less than the previous MA200? And is the current MA50 value equal to or greater than the current MA200 value? If both statements are true, it means the red line has crossed over the blue line from the bottom to the top, and we'll know this signals a golden cross. If this is not the case, we'll check whether the previous MA50 value is greater than the previous MA200 value. And is the current MA50 value equal to or less than the current MA200 value? If both statements are true here, then it means the red line has crossed over the blue line from the top to the bottom, and we'll know this signals a death cross. Finally, if neither of these are true, we won't enter the market because we did not receive a trading signal. Now, I'm not going to give you a full tutorial on what I coded for this, but I added some detailed comments. If you do want a separate video going through the code, just pop a comment below. But here's a basic rundown. Okay, full disclosure, I've never actually written any code in MQL5 before, so getting it to compile took a couple of days. So we start with the header comments at the very top of our script, which traditionally includes the file name, the copyright notice, and other essential metadata about the script itself. Moving on to the script properties. Here we define critical script details such as the copyright ownership, a link to the website of the copyright holder, the script's version number, and a strict property. This strict property is crucial. It enforces the variable declaration and prevents the use of outdated functions and structures within our script. Let's quickly discuss the expert magic number. Now, the expert magic number serves as a unique identifier to distinguish trades initiated by this expert advisor from those opened by other advisors or manually by me. After that, we delineate all our global variables. These include the moving average handle for retrieving values, the arrays for the moving averages, and both the preceding and current values for these averages. Lastly, we declare our variables for tracking our orders. So our NQL5 Expert Advisor is structured around several key functions. The first one we explore is the onInit function, which executes at the onset when the script or the Expert Advisor is first activated. Its primary role is to establish the handles for the moving averages. We take the arrays for each moving average we've constructed and convert them into a time series array, aligning with the standard practice for time series data in trading. The function then initializes the previous moving average values by adopting the most current values into the variables, last MA50 and last MA200, utilizing the copy buffer function to transfer data from the indicator buffers to the array. Upon successful setup, the function signals init succeeded, indicating the successful initialization of the Expert Advisor. So we're moving on to the onTick function now and its logic. And basically, the onTick function encapsulates our trading logic, activating every time a new price quote occurs. So every time the price changes of the symbol that we're trading with. Within this function, we first update the current moving average values. We calculate the midpoint between them, and then we verify whether any sell positions are currently open. And then we check for the golden and the death cross. So basically, we examine the possibility of a bullish crossover or a bearish crossover, each involving comparisons between the last and current moving average values to determine if a crossover has occurred. If a signal is detected and no corresponding trade is open, the script logs a message and proceeds to execute a market order through the place market execution order function, detailed further in the script. Lastly, we delve into the market order execution function. It starts with initializing trade request and result structures, determining the decimal places and point size for the symbol, and setting a permissible slippage. A reconnection mechanism is also in place in case of connection loss. Finally, the action is set to execute a deal immediately. Depending on the received signal, an order to buy or sell is placed. Post-execution, error detection mechanisms are triggered to ensure the order's success or, in case of failure, to log an appropriate message. So now that we have our basic code structure, let's take it for a test drive. I'm not expecting too much from it because the strategy that we've implemented is a pretty basic one, but here's to hoping. So we are going to compile our script and we are going to debug it on history data. All right, so here is our 4-hour candlestick, and we are currently trading on the Euro USD symbol. And each of these bars represents a 4-hour period, and you can see it goes up and down in price as the market changes. I'm going to fast forward slightly. Before I do that, let's just have a look at our panel at the bottom over here. So here we have our trade panel. This shows our current balance. And it also shows whenever we open a new trade, it will show that, and it obviously will reflect, our balance will reflect whether that trade was successful or not. We've got our history over here. You can see we haven't filled any orders yet because there has been no crossover point yet. And under our journal, we'll see the latest data. So it'll tell us when a crossover event happened. It'll tell us when we've opened a trade or closed a trade, etc. Let's fast forward a little bit to find our first crossover point. And I'm just going to pause this. I just want to show you this. So you can see this is our time. So currently we are on 6 January, and I think this is 2020 or 2021. We are running this backtest from 2020, I see. All right, so this is 6 January, and this is the price, the current price of the Euro USD. Right, so we're fast forwarding up until the first crossover. And there it is, there's the crossover, and you can see this is where the price opened up and a sell signal was triggered, and we placed an order, a sell order over here, with our stop loss being this red line, and this is where we opened up, where we opened the trade up, and our take profit is somewhere beneath that. Let's just zoom out a little bit to see if we can see it. So this is our take profit line over there. All right, let's just carry on. Let's see. And we actually hit our stop loss at this point. So this specific trade would have resulted in a loss. Let's just go to our trade. So you see we actually made a loss of $80 on this trade. And if you go to our history tab, you'll see that the trade was closed in a loss. All right, let's just carry on and wait for our next crossover point. Just fast forwarding a little bit again. So now obviously with our moving average over here being the moving average 50 and this being our 200 moving average, the next signal we are expecting is a buy signal. All right, new signal opened. We opened a buy position over here, buy signal triggered, and this is our take profit and this is our stop loss. And our stop loss was hit again. All right, another trade opened up a short time after that. This is our stop loss. This is where it was open. This is our take profit. Let's see what happens. And in this case, our take profit was hit. So now if we go to our history, you'll see 3 trades. 2 of them, the stop loss was hit. 1 of them, the take profit was hit. And if we have a look here, it seems we are $37 in the profit at the moment. So let's just have a look and see what happens if we fast forward really fast. So this is as fast as it can go. So it's going to go really fast. Just notice the time go by over here at the bottom. Alrighty, so trades open and close as the moving average crosses over each other. All right, here's our journal. Okay, so it is finished. We ended the simulation off on the, I think it's the 10th. Let's just zoom in. Yeah, on the 10th of November. This was our cutoff period, which was this last week, Friday. Let's have a look. Why isn't everyone doing this? We just made $15,000. Well, that was unexpected. 15,000. 15. So for such a simple strategy, that worked surprisingly well. However, let's not forget that this is only the first puzzle piece, and we still have a long road ahead of us. P.S. I'm making the code I wrote available for free, link in the description. If you decide to download it, I would recommend testing it extensively on a few different timeframes and different back tests before trying to implement it in your own strategy. If you like this video, please consider subscribing and joining me on this journey.